All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen. It's a new week, new start. And this week we are quite busy as well on the economic calendar because we have, apart from economic data sets from various countries, we do have the four top central banks delivering on their interest rates. So we have the Bank of Canada, we have the Federal Reserve, we have the BoE, and we do have the Bank of Japan. So before we jump into all that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, like I said, it's a busy week. Could be quite volatile. Markets, equity world is at its all-time highs in the US. So that's also an interesting moment happening. Look, also, just before we jump into the action, let's quickly have a look at our website, our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Also, just a quick mentioning that I'm going to be running a webinar next week, so on Tuesday, so check it out. It's a closed event. It's going to be on the RSI indicator, and basically we're going to be I'm going to talk a little bit about that, but the main kind of focus will be on kind of applying it in real life market action on a demo account, but still looking at the effectiveness of such an indicator. So hopefully you'll enjoy it, and I hope to see you there. You can find the link in the description of this video. So ladies and gentlemen, let's have a look at the economic calendar very quickly. So Monday, we had a bunch of data here today, but I think the focus kind of falls on on the central banks, and this is the whole topic of this little video. We do, like I said, we do have a bunch of other data that's going to be really important, and the central banks will be keeping a close eye on it. Like for example, the UK. In UK, we're going to be getting tomorrow. We're going to be getting the job numbers. From Canada, we'll be getting the inflation figures. But yeah, the main action probably will start on Wednesday when, of course, the UK will be delivering its inflation figures. But then, yes, Canada, the Bank of Canada will be in the spotlight because look, the bank is expected to cut rates together with the Federal Reserve, which is going to be seen delivering rates later on. Also, the expectation is right now for a 25 basis point cut on both sides, on both sides of the two countries. And certainly, yes, we do understand that the Fed right now, let me just refresh this just to see the percentage. The Fed is expected to cut like by 25 basis points only. I think that the 50 is a bit of a stretch, to be honest. Because again, the bank needs to worry about not only the labor market, which I'm assuming that's the whole point of the cut, but also about the inflation figures. Yes, inflation figures, we know that right now U.S. Inflation, and let me just put this one, there we go, inflation rate year on year, let's jump into that one. So it is on the lower side, don't get me wrong, it's not far from the 2% target of the Fed. But as I said multiple times, several times, and I'm going to stick to this idea that if I would be, let's say, crazy enough to apply technical analysis on this chart here, then whenever we get a sharp decline and then a gradual decline like this, we tend to break to the upside. To be honest, this is like one of those patterns that I've noticed in the in the trading world. And yes, I mean, like I said, this looks like a nice little falling channel, but it's not your usual kind of falling channel idea, where yeah, you look at the prevailing trend, and the prevailing trend kind of tends, shows the downside scenario, and that's where you could expect this one to drift lower. No, on the contrary, on this one, this pattern actually I've noticed more times, more often a breakout to the upside. So again, not saying anything, but just giving you a little, a little bit of food for thought. But anyway, look, in general, don't get me wrong. I mean, if inflation rises to 3%, the world shouldn't be panicking. But The U.S. should not be panicking, but because we in 2023 we were kind of around these like 5, 6, 7 levels. Um, Again, that's also a bit of a problem. However, this time I think it's any little tick up kind of causes fear. I think it's like the market's trying to feed on something that they need some sort of like action to justify the strong moves in the economy. Anyway, ladies and gentlemen, look. Long story short, for now, the Bank of Canada willing to drop to 2.5 by 25 basis points. That's fine. That's okay. I think that they can afford that because again, their inflation is. Let me just double check. I think their inflation is like up till 2%. So let's see. Let's see if I'm gonna get this. Yep, Canada inflation. There we go. So you can see that 1.7. They're not even like they're still close to the Bank of Canada's inflation target, which is also around 2%. And their inflation, they have a little bit of an opposite situation. They have like a bit of a slowdown in growth, and the prices are falling quite drastically. And to me, this kind of course, to everybody, this is an indication that spending is a little bit on the lower side in Canada, and everybody's kind of being a little bit more fearful. But also, tariffs play a big role in this. Of course, this creates this uncertainty. So you understand. So that's why the Bank of Canada can't afford to go for more rate cuts, but the Fed, look, it can afford to, but certainly the U.S. inflation is a little bit showing a little bit of a different tendency. Now, look. For now, like I said, we're watching this carefully. The way this could play out in the equity world. Look, for now, we're seeing U.S. indices here at their highs, at their all-time highs. Dow retraced a little bit on Friday, but still, tried to go for that all-time high. But look, I mean, on Thursday, the Dow hit an all-time high here on the cash index. The S&P continues to push. I mean, it's trying it's trying a lot, very very much. The Nasdaq, the index that was playing the catch-up game now is showing kind of more strength. And of course, everybody's in the tech world. Everybody's we're seeing some positivity kicking in a little bit, I would say. But okay, we're seeing a little bit of a pre-market pricing here is showing a little bit of a decline in Nvidia, AMD. Let's have a look what's happening with AMD. Similar probably story, a little bit higher actually. You know what? No, a little bit higher. MSFT. Let's have a look at that one. Pre-market lower. So let's see what's happening with Tesla. Tesla's on fire. I mean, look at this animal. I mean, this is just pre-market right now, right here. Boom. Anyway, look, the topic still remains these indices, and of course, what we're going to be watching here is going to be the U.S. dollar now, which is, look, I'm still somewhat bearish on the U.S. dollar, and I'm still looking towards some more downside if if the bank, the Federal Reserve, during the press conference, if Jerome Powell suddenly starts saying that, you know what, we're still seeing possibility for some rate cuts, for this way, I'm expecting more downside in the U.S. dollar. However, if suddenly Jerome Powell turns around saying, you know what, I think we're done for this year, I think that this could strengthen the U.S. dollar. This could strengthen the U.S. dollar. We could see some nice upside, and certainly maybe this could be a little bit of a recovery moment. But for now, I'm not really a strong believer in the stronger dollar, just because again, it's at the moment it's very convenient for the U.S. government, because again, it's making U.S. exports more attractive on the global arena. Now, going further into other central banks, Thursday, we are going to be hit with the interest rate decision by the BoE. Now, look, the expectation right now is for the rate to remain the same at 4%. However, if by any chance suddenly a surprise comes out and they're going to drop it to 3.75, for me that would be a surprise. Why? Because GBIR. Let's have a look at this one. GBIR. There we go. their inflation is actually picking up very rapidly, and it's already getting closer to 4%. Again, I do acknowledge the fact that we have seen higher levels back in 2023, but at the moment, like it's a little bit of a different story. Like I said, everybody's picking up on even the smallest thing. So, and everybody's fearful, that this could spiral very quickly to the upside. Look, I don't want to be the the bearer of the pessimist news, but in general, there is a tendency there could be some more upside here on the UK, on the British inflation. So we're keeping a close eye on that one. And but if it suddenly, let's say, it comes out the same as previous, the 4% at 4%. What I'm watching here is the how many members will be now in favor of the cut. So look, previously there was five. The five members were in favor of the cut, four were again unchanged. Now there's like less, right? Only two are in favor for a cut. Seven. If suddenly some of these guys here from this unchanged block jump into the cut, well, this could be an interesting moment for the British pound. Where's that pound against the US dollar? There we go. We could see a little reversal back down. Look, but for now, what I talked about in my Markets Talk webinar every morning, or actually, sorry, every morning, every Monday, Wednesday, and Friday morning. Basically, what I said on the GBP USD, and I have been talking about this like for 3 weeks already. Like this could be a possible neckline. There we go. Boom. We have ourselves a nice little complex inverted head and shoulders pattern. Left shoulder, head, bit of a creepy right shoulder here, and there we go. We're getting a nice clearance of the 1.3585 territory. I talked a lot about this, and I said that if we do push and stay above it, I'm going to go higher. And so far, yes, we're going higher where there is a chance for this one to push further north. So, ladies and gentlemen, let's see what's going to happen here. At the moment, like I said, everything's pointing more towards the upside. Again, keeping an eye on the UK inflation, which at the moment is expected to, the headline is expected to remain the same on Wednesday morning. Core year on year expected to decline a little bit. So again, maybe this could bring the pair back down. Look, for now, it's unclear. I think for now, the market goes with the fact that the dollar is weaker. Let's push this pair higher. And finally, of course, the final central bank that's coming out, and that's going to be on Friday, early hours of the Asian morning, BoJ interest rate decision. A few hours before that, like 3 hours and 30 minutes before, we'll get the inflation numbers from Japan. Now that's going to be an interesting one. At the moment, I don't see any forecast apart from for the core, which is expected on the lower side. So in a way, that kind of supports the idea of cutting rates. Look, and at the moment, the BoJ is expected not to do anything during this meeting. They're actually expected to do something during the October meeting. We're expecting a hike, actually. So I don't know how that's going to sparkle with the new big party that is in the government, in the Japanese government, which is in favor of cuts. They would probably advocate that, you know what, guys, we need to actually go for those cuts because, again, inflation is dropping. We're fear that, we could see some issues around here, like on the growth side. But I think that everything is managed so far. I think the BoJ kind of is in control, in my opinion. Again, might be wrong, but at the moment, I think that they are where they are. They are in that place where they are. So, in comparison, maybe to other countries, other central banks, maybe we could start seeing problems here and there. But I think that they are where they are. They need, and so for now it's manageable. But the fact that they're going to go for or at least planning to go for a hike during the October meeting, that's an interesting moment. So, but again, I think a lot will depend on what kind of inflation numbers we're going to get. So yes, we're expecting on the lower side a little bit. So if suddenly this drops below the forecast here, the 2.7. I really don't know if they're going to go for that hike. So we'll see, of course. We'll see. Anyway. So yeah, and in terms of speaking of Japanese yen, look, for now, against the euro, we're seeing this nice weakness. I don't know if somebody can say this, but we're seeing some nice weakness in the Japanese yen against other major counterparts, like the euro here. And looking at this formation, looks like a nice little ascending triangle pattern. However, while we remain inside the pattern, I'm just not doing anything. I'm waiting for a clearance. I need a clearance through one of the sides in order to consider the next short-term directional move. USD JPY here, still flat, still waiting for. I think it's waiting for the Fed actually more than the BoJ. I think the BoJ will be the sprinkle on the top, whereas the Fed actually will determine the big move. And looking at this, we're in a little range here. The prevailing trend was to the downside, so kind of leaning a little bit more towards the downside on this one. And because, like I said, at this point, I'm not really a strong believer in this strong dollar. So hey, and if suddenly the stock market reverses lower as well, it's this is a battle of the two safe havens, right? I mean, and at this point, I think the Japanese yen would be a slightly better safe haven. And anyway, I might be wrong. And quickly, GBP JPY, very quickly on this one. Beautiful, actually push through the barrier right here already. I talked a lot about this 200 zone. So hey, we're clearing it. Let's see if we can stay above it. If we can stay above this, then certainly I will consider some higher levels. And by higher levels, what I mean here is, well, something around here actually, maybe something around this line, just a second, where's that horizontal? Right, there we go. And somewhere around here. So 202, I think it's a good target. 203.80 is also a nice, not a bad target as well. Ladies and gentlemen, thank you very much. I hope you found it useful. I'll have to wrap it up here. Let me know in the comments what you think, and how are you positioned for all these central banks? I mean, are you long on something, or you're like short on something? Let me know. It would be nice to know in the comments, and please, don't forget to like and subscribe. I hope you liked this video. So thank you very much, and hey, I shall see you next time in my next little video update. Bye for now.